Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics for ALN Apartment Data. And this month's newsletter was titled New Supply Slows, but Lease-up Backlog Remains. And the article was basically a breakdown of the current new construction pipeline, looking specifically at units currently under construction nationwide, and then also, again, identifying the quantity of lease-up units that remain in a lot of these high-supply markets, especially across the Sun Belt and the Mountain West region. But for the takeaways video this week, I want to just spend a little bit of time on some areas that were not included in the newsletter, specifically some market highlights. And the first area that I wanted to cover is basically markets where we expect new supply to be speeding up substantially or slowing down substantially over the next couple of years. And as you would expect, given that last year likely was the peak for new supply in this development cycle, there are more markets slowing down than speeding up. Nevertheless, there are a few markets worth noting where if you look at their units under construction compared to new units delivered over the last 2 years, which is kind of a rough approximation generally for the under construction portion of the pipeline, we expect the majority of those units to be in the market within 18 to 24 months. So if we look at under construction units versus 2-year new supply, it gives us kind of a rough estimate of which direction new supply activity is going to be moving. And really, there are only a couple of markets where new supply is expected to sort of notably increase over the coming couple of years. Los Angeles, Orange County is one, Miami, Fort Lauderdale would be another, and then New York would be the third. And again, I would say with New York specifically, it's important to remember that that's not just the city of New York, but you've got areas of New Jersey and that metro area as well. If you actually look at units under construction by city, about half of the top 10 cities in the New York market are in New Jersey. Jersey City is I think the top city right now in New Jersey. So New York, again, keep in mind that that's not just the city, although Brooklyn specifically does have quite a bit of construction activity going on right now. So those are sort of your three main gainers in terms of deliveries increasing as we move forward. In terms of decreases, there are a ton of markets, so I just wanted to quickly go through a few, and Texas is well represented. So really most of the Texas primary markets are near the top of the list in terms of unit decrease between recent supply and upcoming supply. So Austin is number 1 in the country. You've got Houston, number 3, Dallas-Fort Worth, number 4. And then other markets worth mentioning, Denver is number 2, and then Atlanta would round out the top 5. So those are, again, Sun Belt markets, Mountain West markets. These are the areas where, we see finally some relief on the horizon in terms of the deluge of supply that's come online over the last few years. And then again, when we're talking about new construction, it's important to remember that new supply and pressure from the pipeline doesn't just come from the under construction units. It also comes from the units that are still trying to lease up and reach stabilization as new units are continuing to come online. And so in terms of markets with sort of the largest backlog of lease-up units, you're talking about areas like New York, Dallas-Fort Worth, Austin, Atlanta, Phoenix. Again, you'll notice that Dallas-Fort Worth, Austin, and Atlanta were on the previous list that I just mentioned. So again, these are areas that are needing a slowdown, at least in the short term in supply, because they have a huge backlog of lease-up properties. And then if you look on a percentage basis, so again, those are all large markets. Anytime you're looking at aggregate stats, those markets are going to stand out. If we look at lease-up units as a percentage of existing stock, you get markets like Rapid City, South Dakota, Lakeland, Winter Haven in Florida, Sarasota, Bradenton, also in Florida, both in my neck of the woods, sort of ancillary Tampa areas, Myrtle Beach, South Carolina, Fort Myers, Naples, again, Florida. So you'll notice a lot of Florida markets on that list in terms of properties that need to stabilize. And that's it for this month. I think a couple of upcoming events to make you aware of. September 18th, I'll be speaking in Portland at the Multifamily Northwest Spectrum Education Conference. September 23rd, I'll be speaking for the Utah Apartment Association in Salt Lake. September 25th, I'll be speaking for the Bay Area Apartment Association here locally in Tampa, and that'll be in Sarasota. And then October 8th, I'll be speaking for the Missouri Apartment Association at Land of the Ozark. And other than that, check our blog, alndata.com/blog, and search for ALN Apartment Data on your social media of choice to get details on those events as well as other great content that we're putting out. See you next month.